Hi everyone, Stats Trader is here, and in this video I'm gonna show you how to find stocks to trade every single day. Now I'm also gonna show you how by using this method I was able to make $1,600 just in 2 days. As you guys can see here, I have two monitors, and one monitor here on the left, it basically has only the screener for all the stocks. So I have my regular stocks here, Nasdaq and New York Stock Exchange, and I have all my OTC stocks right here. So what it does, it actually scans live for all the stocks I might be interested in. Let's say I see a huge volume on a stock, or a stock holds. I'm interested in this stock, and this will show up on my screener. But let's say you don't have Interactive Brokers, because this is the platform that I'm using to screen these stocks. Let's say you have another broker which doesn't provide this kind of service. So there is no problem. There's still a way for you to find stocks to trade. So how do you do that? There's a website, it's called Finviz.com, and if you go to Finviz.com, you go to a section screener, and you'll be able to find the stocks. And let's go ahead, I'll show you what I mean. Okay, so the first thing you do, you type in Finviz.com in your search engine of the choice, and so you go ahead and go to Finviz.com. So you're on Finviz.com, and immediately you go to the tab screener. This is where you actually look for all the stocks, and you can screen for the stocks with specific criteria. You can filter them by signal. So that's what we're gonna do. We're gonna go click signal, and we're interested in top gainers. So why do I choose top gainers? Because you know that top gainers are usually the stocks that most people are interested in. They tend to trade a lot of volume, and in general they're very volatile, and that's exactly what we need. So you see the following columns. You have ticker, company, sector, industry, country, market cap, price earnings ratio. I don't really use that, that's pretty useless. Price of a stock, and percent change. So what you need to look at is percent change. So this is where you see how much percentage wise a stock price went up relatively to open price today, and also you see the volume. Now let's look at this stock. So the ticker is WAFU, and it's Wang Fu Education Group Limited. And we know that it's a very low market cap, and it went up 166%. So let's go ahead and analyze what's going on here. Then we scroll down, and we see all the important stuff it's all here. This is what the things that I mainly focus on when I decide if I want to trade or not. So market cap, then immediately after that I'll look at shares float. That's the most important thing. How many shares are available? And I see that it's extremely low float, it's micro float. Shares float is only 1 million. So I know that given a strong volume, the stock can spike right from the open. Now the rest of the things that are listed here, market cap, income, sales, books to shares ratio, it's a good idea to know what it is, kind of know the definitions and what they stand for, but you can completely ignore this garbage, because leave it to people who have, MBAs and CPAs. They kind of look into this stuff. If you're a day trader, it's not really relevant to you, and I never look at it. So, and then you kind of build your own criteria, like what do you want to look for. Generally, if you're a new trader, you want to stick with stocks that are 100 million market cap and under 1 billion. And also you want to stick with shares with float, I would say not less than 10 million, because these kind of low float stocks, 1 million, 5 million, under 10 million stocks, they're extremely extremely volatile and sometimes not predictable. But this is how you find these stocks. You just go to top gainers and then you go through the list of these, and if you look at the volume and you make sure that it's trading at least 1 million volume or more, and you'll be good. Part 2 of this video, how I was able to make $1,600 in just 2 days trading low float stocks. Now, as you guys know, there's 2 main criteria for a stock. The first criteria is the volume. Now, volume is the indication of demand that the stock has in the moment. Float is a supply of a stock, how many shares are available to immediately purchase. But typically, just a rule of thumb, the lower the float is, the higher the price can go. Why is that? Just imagine you have just 1 million shares available to be bought or sold on the market right now, and you have 10 million volume coming to buy this stock. Well, the rule of supply and demand, if you have a high demand and very low supply, the price will go up. The same thing applies to stocks. So the lower the float, the higher a stock can go. How was I able to find this stock that made me 800 the first day and another 800 another day? This stock, it only had 750,000 float, 150,000 shares float. It's like extremely low for a stock, which in my mind, I'm thinking, if it's a low float stock and I see a demand right before on the pre-market, I know that this stock can go 100%, 300%, 500, even 1000% in just 1 day. Just a basic criteria for me, when I'm deciding if I'm interested in trading a stock or not, I'll look at a pre-market volume. Now, pre-market volume is how many shares were traded pre-market before the main hours of operation of New York Stock Exchange. That out zone for me is 1 million. So if, let's say, a stock traded less than 1 million shares pre-market, I know that there's not enough liquidity, there's not enough interest in this stock, and most likely I'm gonna skip it. Imagine you trade a stock that has 40 million float, right, which is pretty normal, and it has 1 million pre-market volume. Now, you know there's gonna be some kind of a spike, some kind of a movement in the morning that you can counter, but imagine what if you have 3 or 4 million pre-market volume and a stock has only 1 million float. Now you know that the move is gonna be completely different. You know that if the stock gains a lot of volume from market open, you know that this stock will spike a lot. Exactly what I did. I found a stock. It was extremely low float, and as soon as I saw that it halted, and halted means whenever stock price moves too much, either direction, either up or down, exchange will halt the stock. They will temporarily stop trading on this stock to set the bid and ask prices that are suitable. And so you have this 5 minutes, at least 5 to 20 minutes time range where everybody wants to get into this stock. A simple example, imagine it's a very low float stock, it's 1 million float, and the stock is only $6, right? And immediately, let's say pre-market volume was 5 million, which you know that everybody's interested in this stock and people are going to be trading this stock. Now, being extremely low float stock, as soon as this stock opens, it spikes 30-40% and it halts. So it went from $6 to $8 in 20 seconds. And immediately the exchange halts this stock. Then the hold is for 5 minutes, right? And during the 5 minutes, everyone who wanted to buy the stock but they couldn't, they're setting their market orders. As soon as the stock reopens, they will be executed, right? So, which means that right after this hold, there's a high chance, high probability that a stock will spike even more. And statistically, I track how many holds you usually have on a way up. And so, according to my data over the course of last few years, if it's a low float stock, you can wait as many as 7 holds sometimes. And during these 7 holds, the average high percentage is around 500-600%. So that's how you can just risk a few $100s and you can make massive returns. I remember making thousands of dollars just with these kind of plays. I would make $800 to $1,000 a few months ago in just one day, just trading this very simple setup. Let's go ahead, I'm gonna show you how it was looking when I was trading it in my terminal. Okay guys, so this is my Weebles account, and as you can see, this is the 3-day period, and I made $1,743 in just these 3 days. So most of my profits were made on this stock, EEIQ, and I made $789 just buying this stock. And I showed you the process, how to find it. Now I know that this stock is very low float, it's under 1 million float, and you only buy these kind of things if you see a huge volume. So let's go ahead and see what happened there. So I knew this was the extremely low float, and also I saw there was this huge pre-market spike from $5 all the way to $68. Now only stocks that have under 2 million float, they can spike this much. So percentage wise, I don't even know, like 1,000% spike. And again, this is pre-market, so I know that there's a lot of interest in this stock, and it has a really high chance to spike right from the market open because of all the pre-market volume that was there. Okay, so here I am, and the market is about to open, and I know this stock will gain a lot of volume just based on the pre-market volume, and I'm waiting for a stock to spike and hold. Now holds are very important as they basically trap all the buyers, and the new buyers that want to buy the stock, they can't buy it for another 5 to 20 minutes, but as soon as the stock opens back to trading, they will jump into the stock, causing a huge spike. Now where is the idea, like how do I know how far the stock can go? Now as you can see, this stock formed a resistance around $73. So right now the price is 18. So I know potentially this micro float can go, max it can go is $71 because there's a lot of back holders there. And depending on how much volume it gains, again, you kind of get it from tracking statistics on this kind of low float stocks. Depending on how much volume it gains, it can spike 100%, 200, or 1000%. So that was my game plan, and this is exactly what I did. So the stock opened, and it's a 1 minute chart. So it's a 1 minute chart, and this is what happened. The stock opens at $17, spikes all the way to $19.60, $19.70, and of course it holds because it's a low float, and it went up a lot from $18 to almost $20 in just 20 seconds. And now I know that there's a lot of people who would want to buy this stock, and they can't right now because the market is halted. And I'm gonna wait till market reopens, and I'm gonna buy with the rest of them. And so surely enough, 10 minutes later market reopens, and I bought it at $20.40. So as soon as I saw it dropped a little bit, I bought it right here at 20. And then in 20 seconds, and I think I bought like, I don't remember, like 200 shares. I didn't buy that much. And 20 seconds later it halted again, and then it halted again, and I think I closed it around $25, so right here. So as you can see, and I think overall in 20 minutes I made almost $800 on this play. It's very predictable, it's very simple, and let's see how far stock went. And as you can see, I could have waited a little bit longer, but I also know that I can't be too greedy with these kind of stocks, because as soon as they turn against you, they usually drop and they dropped pretty much 90% from the spike statistic wise. So that's why I exited around 25, made my quick 800 bucks, and it went all the way to $35. And then of course it dropped. There was this huge drop, and it halted for the rest of the day, and then you see it kind of went down. And yeah, so that's why you never want to hold these long term. It's very simple play that you can do, and it's pretty safe, I would say. Okay, so that's it, guys. This is how you find these low float stocks. When they gain a lot of volume, they become very predictable, especially if the spike happens in the first few hours of the day. And also, if the same thing happens in the midday, I would say 12 to 1 p.m. New York City time. You can also do these. These are very simple to do, and just the main thing is you have to be really quick. You have to be in and out with these kind of plays. Just make a quick 30% in your investment and get out, because if you don't, you're gonna lose, and these things crash very fast. So thank you guys for watching, and ask me any questions in comments under this video, and see you guys next time.